Boys.
Today I'm going to be teaching y'all about the benefits of having an LLC and tax benefits to it and why you would want one and stuff like that. So there's two ways that like there's two main things that people get paid. So it's either W-2 or 1099. So W-2, think of this as like any employees. So whenever an employee gets paid, say they get paid 100K. So if you're getting paid 100K, then you're getting taxes taken out every single week, and they're gonna total up to be probably about 24K. So 24K, you're paying 24K in taxes. So you only get, what is that, 76.
Yep.
So you basically make 76K. Whereas if you're 1099, you're basically another entity. So what that means is instead of being Zach Sasser, Tyler Dozier, or Blake Preston, or Kyle Sasser, you're a business. You're like a separate entity. So you're like a different person in the eyes of a government. So the government isn't taxing you as an individual person. They're taxing you as a separate entity. So that's why whenever I have like my own LLC, those are two different people. They don't tax us together. So what that means is they don't tax you every single month. They don't take money out of your paycheck essentially. So if you make 100K, that's about 8K per month. You get that full 8K. Whereas these people, they're actually getting more than 24K taken out in taxes. That's why you get like a 5K refund in April or something like that. And people are like, oh, I saved all, I get this money back. You know, they're super happy. No, guess what that means? The government's taking the same amount of taxes out. That just means they took more out throughout the year and then they gave you some back. You think that's cool? You think somebody's stealing it and then giving you some back is cool? Fuck that. So if you're 1099, you don't get any taken out of your monthly taxes. That's why you need to set some aside because you're gonna have to pay at the end of the year. But here's the cool thing. So if you have 100K, there's different deductions. So you only get taxed based off of like your profit. So if you need to rent a place to do business, like this office, that's a tax deduction. That's an expense. So think of like the local restaurant. Say they sell a burger for $10, but it costs them $5 to make it. They only pay taxes on that $5. They don't pay taxes on that full 10 because it costs them 5 to make it. So if you have a $10 burger, you minus 5, you have to pay taxes on $5. If it's you needed that on?
Yeah. I just dropped that off.
Okay. All right, so let's think of that on a bigger scale. Say you do $100,000 in burger sales, but 50,000 of it was the cost of the patty, the cost of the bread, the cost of the tomatoes, all that stuff. You only have to pay taxes on 50,000 of it because that's a tax deduction. So if you're a 1099 and you have an LLC, you can use tax deductions. So simple tax deductions would be if you have to do like an office, and that's going to be a tax deduction. So say you make 100K and your office is 10K. And say you go on business meetings. So you go on business meetings with, like I go with Blake, and we talk about business. We talk about doing business together. Say we do that every single day, and it racks up to be like $5,000 of food throughout the whole year. That's going to be a tax deduction because it's a business meeting. Marketing, investing. You want to invest into a coach, like Apex is a tax deduction. So if someone's like, man, I'm making 100K, but I want to make $1 million. Okay, you should be in our Apex 2 program. That's going to be another 12,000. That's a tax deduction too. What's another tax deduction? Dude, you can find tax deductions.
Your cell phone bill,
Dude,
your
literally
gas,
everything. So
your
so miscellaneous bills, bro. Let's just say 5K. Clothes. Say I need
Work
this Lone
clothes.
Star exterior shirt to. Okay, say that's another 5K. So basically, what you're doing is all these tax deductions are taking away from this 100K. So you still had to fucking go to eat food for $5,000 at this. You still had to buy clothes. You still had to do all this shit, but you only make 76,000. You had to pay 24K in taxes. Whereas you do the same shit right here, but you consider it a business expense. Let's rack that up. Say you probably have more, but let's just say this. So 90,000, 85, 73, 68,
47?
63.
Wait, oh, you're doing the AK. Never mind.
Wait, is that not 63,000?
For
15, 17, 22, 27, 73. Am I tripping, bro? 10, 22, 27, 37. So that would be 63. So basically what this number is after all these tax deductions, this is basically what you're showing as, oh, this is what I needed to run my business, this is what I needed to run my business. They're called expenses or tax deductions. So you only pay taxes on this 63,000, the taxable income. So what you're doing is you're taking down your taxable income by all these expenses because you have an LLC and these are essential to run your business. Going to lunch with Blake every single day is essential to run my business. Who the fuck is the government to say that I don't have to do that every day in order to run my business? Like, they don't. So you take your taxable income down to 63, that's almost half of the 100K. So instead of paying 24, it would almost be half of that. And it probably would be, because the way taxes work is for your first 10K, you pay 0% taxes.
Mhm.
Your next 10K or something like that, there's brackets. So your next one, maybe you have to pay 10% in taxes. So that's going to be, you have to pay 1K. And then your next K from, so this is 20K. From 20K to 30K, maybe you have to pay 20% in taxes. So that's going to be 2K. So your first 10K, you pay nothing. Your second 2K, you're going to pay 1,000. Your third 10K, you're going to pay 2K. Maybe your fourth one, or maybe it could be your next 20, so 40 to 60K, you're paying, and this is going to be high, but maybe just say like 30%. So then you're going to pay 3K. So what you're doing is each of these tax deductions, so say you make 100K, your first one is going to be, so say this tax bracket from 60K to 100K is taxing you at 40%. So basically anything that you can lower this tax bill from, you're getting a 40% discount. So from going from 100K to 90K, you save 10,000, that's getting taxed at 40%, that's 4K. So that's why, like, the people that, if you're making 100K and you invest 10K into Apex or something like that, you're basically getting it 40% off because it's a tax deduction. Does that make sense? So that's basically what you're doing is you're lowering your taxable income at each of those.
What happens with medical care and healthcare and that type of stuff and insurance?
Yeah, I think a lot of that is tax deductible. I'm not a financial advisor, but talk to Trevor and Kale. That's who I use at Easier Accounting, and they basically shoot you over like a whole thing saying, hey, did you do any of these? These are all tax deductions. Travel? Did you go travel? Did you eat anything? You put it to 55 degrees, bro. But yeah, like medical and stuff like that, I don't know. Some of that's personal, so you can't, but then some of it's not. So there's this book, what is it, Tax-Free Wealth or something like that? Tax-Free Wealth, he basically talks about it. Thomas talks about it. He says the only shit that he does personal is like mortgage.
Yeah.
Mortgage.
But you can write off like
Some of that because
And like maybe like one or two other
if he has
things.
an office in his house, then you can,
Half of your mortgage, like if you have an
Yeah.
apartment and you work out of one of your rooms,
Yeah.
you can, percentage of that room be taxed.
So basically what that book says is the tax law is better for the people that understand it.
yeah.
And it's better for the people that drive our economy, which are entrepreneurs.
Yeah.
So if you're an entrepreneur and you start thinking as an entrepreneur, like, hey, I'm buying this because I'm an entrepreneur. I'm supporting a small business to keep our economy running.
Yeah.
So the tax people in the government are going to reward me for that. You're not taking advantage of it. None of this is illegal. You're just using the tax advantage to your benefit,
Yeah.
which is really the game.
Yeah, they incentivize investors because those are the people that are running the economy.
So if you're an employee, if you're a W-2 employee, you're not doing anything for the economy. Like, you're not starting new jobs. You're not doing, like, yeah, you're letting it run, but like you're not taking on any risk, anything like that. So you motherfucker, you pay 24K of that 100K. Whereas if you're a business owner, you're taking on all this risk, then they reward you. So you can take this down to 63. There's nothing saying that you can't take this shit down to fucking 20K. Last year, bro, I showed 42K on my tax returns. I didn't make 42K, bro. I made more than 42K, but I had all these tax deductions, so I had to pay like $8,000 in taxes. Whereas if I was a W-2 employee, and this is why Ryan's smart as fuck for setting us up as 1099, telling us to make an LLC. If I was a W-2 employee, I would have paid probably close to 24K in taxes. So I'd paid a quarter of that just by having an LLC, paying $300 to file an LLC on LegalZoom, and then like 150 extra bucks.
I got a question.
What's up?
The W-2 employees, are they taxed with the same kind of breakdown like you just broke it down over there?
No.
In terms of,
No. You're on a fixed taxable, so you still have tax
What is the
brackets.
fixed tax? Do you know what it is?
No, it's still marginal, bro.
Yeah,
Still
well,
marginal?
I think
well,
it's marginal.
it is. You're still gonna have brackets, but you're not gonna get the nearly as much tax. Like as an LLC, your percentage is like 15.4 or something like that of what your taxes are, versus like 10% on an income tax for a W-2. So technically, you spend more, but because you can deduct those things, you can make it look like that you made a lot less. You can show a lot more losses essentially.
I think
Yeah.
there's a self-employed tax. So
Mhm.
for self-employed, like of
Yeah.
that 8K that I paid last year, I think half of it was just from being like a self-employed employee.
That's because you have no employees under you.
Yeah.
You're just a.
I
Yeah,
don't
because
know.
he's
Is it?
you're in sole ownership of it. You don't have anyone else that you're paying under your LLC.
Oh no.
So like in that LLC, you could go sole proprietorship, but it changes. So like an S corp or whatever, you can do other things in there. So instead of just an LLC, but an LLC has a lot more business benefits for you. But you end up paying more. So like say in an LLC, you're going to, if you can hire people under you and have people under you in your W-2. So like Break Free is an LLC, and so they do have people underneath them. But if you wanted it to be solo, you can. So
I have a few questions on that. Does it matter what you name your LLC?
yes,
It doesn't.
I say no, and the reason why is because I don't want to name it Zach Sasser LLC, because if somebody tries to sue me, I don't want them to be able to find my LLC just by searching my name. Maybe there's a way around it, but
So-
I would just name it something.
so he's right. Like you don't necessarily want something tied right to it, to your name and your personal. I do, but like say if I create a company, I don't have to have that company the name of my LLC. But you can't just go in there and be like, this is my name, because you'll send it off to the state and the
You have to get the name approved.
You have to get it
Exactly.
approved, and also
Exactly.
there's something called a DBA. So my LLC is called Matrix Leads LLC, but my company name is Matrix Marketing Firm.
Yeah.
So you basically, you file the LLC with the state, the Secretary of State,
Yeah.
and then you file the DBA with your county, because you just can't have, like the state, your LLC, there's only one per state, so you have to clear that up. I think LegalZoom has like a verification, hey, you can do Matrix Leads, and then a DBA is actually with the county. So I went to Denton and I was like, I wanna file a DBA for this LLC, not for me, but for this LLC.
The only
Yeah.
requirement is you have to have LLC, company, co, tied to your name. That's all the requirement. You can't just have it be like, if you want to be Blake Preston, you can't just do that. You have to have LLC or like.
But LegalZoom automatically adds that. So
Which
if
is
you
important.
use LegalZoom, don't put it in your LLC name because it'll add a second LLC to it.
No, when it would just say it's wrong, but yeah.
And are there any
Yeah, totally.
benefits of having multiple? Because I know you have a few. Because you have
Just
different-
liability. So like, I have a tree service company. If a tree falls on a roof and like something's fucked up, like someone wants to sue me or something, instead of coming after me and all my assets, my truck, my car, my family, all that stuff, I would just bankrupt the LLC or something like that. Like, it's
You
just,
have, you
it's
have
just
a couple,
liability.
and then you put it under like one main one. Then you have other branches of your LLC.
No, so they're all separate. They're all separate, and the reason why is because this marginal, if my tree service does 100K and my marketing company does 200K, and let's just say 100K to 200K gets taxed at 50%. That's false, but let's just say that one gets taxed at 50%. Then I don't want the extra 100K past this. So instead of making 200K at marketing and 100K at tree, this 100K getting taxed at 50% because it's making my income be over 200K. I would want this to start all the way at the bottom. So the first 10K is getting taxed at nothing. The second 10K is getting 10%. The third one is like that. So that's another reason, is because you want to reset your taxes. So if all my companies, it would just keep adding at a 50%. Does that make sense? Since it's marginal. So each extra $100,000 would be getting taxed at 50%. Whereas if I restart and I have all these other businesses, then it goes through all these lower levels first. So instead of getting taxed at 50%, 10,000 of it's getting taxed at 0, so that saves me, $5,000. This one's at 10% instead of 50%, so that saves me $4,000. This one saves me 3, this one saves me 2. So there's a lot of tax benefits of it. Plus, you just want to keep one for like your own business. So like,
Who do you use for your taxes? In Apex?
Easier Accounting, Kale, Goodman, and Trevor Cali.
Yeah.
That was Cat Peterson's boss, right?
Huh?
Yeah.
Yeah, and Kaysen Jennings.
Uh-huh.
So reach out to
Just
Kaysen if, reach out to Kaysen, bro.
Yeah, I know, they're awesome. They did hit me up, or they didn't hit me up, but they hit up, Ryan, basically